Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is August 29th, 2015. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and strategy. U.S. market crashed on Monday, then rebounded, and currently the market is still in a correction phase. There is not follow-through day yet, but the follow-through day may happen anytime soon. And action and trades. On Monday, I closed all the short positions as the market crashed, and I day traded the rebound from the long side. And then later of the week, I started go long, and my current position size is 70%. I'm 70% in the stocks and ETFs. Let's take a look at the indices and the charts. German DAX index crashed, and then Tuesday it rebounded. NASDAQ monthly chart, as you see this week, we actually did close above the 12-month moving average. Actually, this is the end of the month, August. We break a 12-month moving average. However, we close above that moving average. That's a positive sign for the market. Weekly chart, we close an upper end of the range, so that's also a positive sign. NASDAQ daily chart, as you see on Monday, the market really opened low, but the whole day it rebounded. However, by the time it closed at the halfway of the daily range. So that made me a little nervous. So I day traded on the rebound, but I closed my long position by the time the market about to close. And then Tuesday market actually open high but close low. That was not a good sign. But Wednesday it reversed that trend, and Wednesday the market went up. So that's the day I started long this market. And Thursday and Friday continue go up. We don't know what's going to happen next week, but from the chart, looks like it may just trying to go up, but 4,900 or around the 200-day moving average, that would be the resistance. Mid cap also crashed, but right now it's in a short-term rebound phase. Small caps look similar. SP 500 large cap, it crashed pretty hard on Monday, and Tuesday continued crash. It's almost break the Monday low, and then Wednesday, Thursday, Friday rebounded. And again, this rebound resistance will be 2040. That's range, that's price range, which is previous support, and that could be the resistance for the rebound. Gold price. Gold is still in a downtrend from the long term. This monthly chart. Weekly chart is the same. Long term is still in a downtrend, but short term looks like it may be reversing that trend. And this is a strong rebound and pullback, and go up and pull back. This is a very hard pullback. However, this pullback did not break previous pullback. So from trend analysis point of view, this is making higher lows and higher highs. So the short-term trend is going up for the gold. Silver doesn't do so well. Silver, the short-term trend, it broke the previous low, so that's a downtrend. Gold mining stock ETF undercut previous low, however, it rebounded. GLD is a gold ETF, and same chart with the gold price. PPLT is a platinum ETF, and this one also correlated with the gold. Short term is going up. Silver ETF, silver is a downtrend. USD is a US dollar downtrend, but rebounded. Right now it's close to a 50-day moving average. Crude oil, this is worth mentioning. Crude oil seems reversed the downtrend on Thursday. So Thursday, Friday has a very strong rebound. ERY is an energy bearish ETF. So this one is a 3 times bear ETF. Energy sector ETF go up 1%, this thing go down 3%. And ERY crashed. It previously has a very very strong uptrend. I traded this last week, but on Monday I closed the position, and then Tuesday, Wednesday, Thursday, Friday, those weeks it just crashed down because XLE, which is an energy sector ETF, rebounded. SSEC, this is a Shanghai Stock Exchange Index monthly chart. We're on the third month of the market crash. Let's see what's going on with the weekly chart and daily chart. Weekly chart, we crashed below previous support. However, the week closed on the upper side of the range. That's a good sign. And look at daily chart, we totally broke previous 3,300 support. That means all these funds was supporting the market around 3,300 to 3,500 point. Around that area, there was a lot of funds support this market, and they gave up. They no longer supported. So Monday, Tuesday, Wednesday, Monday, the market opened below 3,300. That's a clear sign there's no support. So market continued go down for 3 days, and Thursday it came rebounded. Thursday, Friday rebound pretty hard. Now that 3,300 become a resistance. So when this rebound reach the 3,300 to 3,500 range, expect the market might pull back again. YANG, that's an inverse of 3 times inverse of China market. This thing, once it reached a very high, like a spike up, that's the point you should take profit if you have this. So when they crash, it crashed also very fast. So from $152 to $100 in 3 days. Very volatile ETF. IYR is a real estate, US real estate ETF, and crashed, rebounded. So right now it's at a resistance point. JJC is a copper ETF, downtrend. MBB is a mortgage bond, uptrend. Mortgage interest rate is in the downtrend. Semiconductor crashed, then rebounded, and right now at the resistance. Social media crashed, rebounded, right at the resistance. And solar is also rebounded close to resistance line. So all these major indexes crashed last week, but later of the week rebounded. XLF is a financial. Monday was an extreme market condition. It just opened very low, and then major indices, ETFs, and stocks all crashed down, but very quickly it rebounded. XLF is broke major support, so right now it's still below major support. Let's look at the tweets. I just want to share my tweets of the last week. I have closed ERY, which is an energy sector ETF, 3 times of the bearish ETF. And on Monday, this ETF spike very high. So that's when you trade the bearish ETF, especially the leveraged ETF, and when you are correct on the market direction, when the market crashed, that you have to take the profit. This is not a position trade. This is a very short-term trade. So otherwise, when market rebound, those bearish ETF is going to crash down very quickly. And I also traded a TECL and QQQ. QQQ is a NASDAQ ETF. TECL is 3 times of the NASDAQ ETF. And then I traded on both sides for the gold mining ETF, GDX. Well, the way I trade on the bearish side is by using DUST. This is a bearish ETF, and NUGT is a leveraged bullish ETF for the gold mining sector. And then I still have QQQ and 3 times of the QQQ, which is ETF, TECL. I have some gold ETF. I also entered a small position for the 2 times crude oil ETF UCO, as well as a 3 times China ETF YINN. I bought a stock. It's a new IPO in EOS and Visa. So I'm going to share with you those charts. Closed trades, and I traded NUGT. I entered the week with a long trade of NUGT, but by this is a Tuesday, and that trade became a loss, so I cut loss, sold it. I actually went short on Tuesday, and then on I'm sorry, this is a Monday. On Monday, I went short. On Wednesday, I took profit on the short side, and I went long. So, and then Friday, I exit the long position for this. So this trade is on the Monday, I took a small loss, and I went short. And then when they reached the low, and I took profit on the short position and went long. So this gold mining ETF, you can pretty much trade on both sides sometimes. And the bearish side is a DUST. So, and this is a DUST. And ERY, I was trading on the, I was shorting the energy sector through the bearish ETF, which is ERY. I was having ERY on Monday, but as the market crashed and the ERY spiked up on Monday, so it formed this cross sign. So from candlestick analysis, this is a potential turning point. So that's the time I took the profit of ERY and got out. So this whole week, this ERY just crashed down. So the market rebounded. So from a hourly chart, this is hourly chart. Here's a Monday. Monday open high and it closed down. So that's a potential turning point. But the turn did not make until Wednesday. So the entire Tuesday looks like it struggles, still try to go up. That's because the market is coming down. So there's an inversed ETF. But Thursday, Friday, this whole thing come down. Market rebounded. This is QQQ. I day traded on Monday when the market crashed, but by the time the market was about to close, I exit the position. And Tuesday market came down. Wednesday market rebound again, so I re-entered QQQ around this price, $102. That is my re-enter price. And QQQ has potential to go up, but we have to be careful. The 105 to 107. This is actually 106. That's a 200-day moving average. That's a potential resistance line. Another potential resistance is 50-day moving average, 109. So we have a resistance line as the market rebound. And my open position, I have gold ETF, GLD. Gold had a rebound and pull back, so I bought it on actually I bought it on Thursday. As a seems like gold has stabilized around 107, so I bought it. There is a potential to go up. My stop loss is a 106, so if it broke previous low, this is a reaction low, and then I will get out of this trade. UCO rebounded very strongly. I entered the trade on Friday. Look at the hourly chart. I wish I had entered the trade on around $18.57. That's when they broke out on the upside, but I didn't notice that strong rebound until Friday. On Friday, I entered the trade around $22. So, and crude oil has potential to reverse the trend. However, it may also just did what previously did. It may be a short-term rebound and then later crash down again. We don't know yet what it's gonna do. We just have to watch this, and if it's gonna turn into a long-term trend reversal, we will have to reevaluate it, and then this moving average will have to go back up. So right now we're still in a downtrend, but we're rebounding. YINN, it's a China stock ETF, and this is a clear rebound here. It's a crash and rebound, and then it spent the week back and forth, but overall this YINN ETF is in a rebound move, and potential resistance will be $26. So that's, I had this trade, and I prepare to take the profit around $26, or if it break down, I may take the loss. Let's look at the hourly chart. The stop order would be $16.98. If it break below this around $60, which was a previous reactional low, that would be a stop price. But on the upper side, it can reach to $26, which would be the previous support, now turning resistance. QQQ is another trade I have it right now. I bought it on Wednesday and continue hold, and may take profit around this 107 on Monday, Tuesday, and maybe an area I get out of these trades. TECL is a 3 times of QQQ and hourly chart. So this is a chart I like to share with you. NEOS, this is a new IPO stock, and the IPO base breakout would be here. It's a little too late right now, but I entered the trade on Thursday, and Friday it went up. So I have a very tight stop order. So if it fall below $25 range, and I will get out. And Visa, well, anyhow, NEOS has a potential to go up, but I usually use trailing stop to protect my position. Now this is a stock Visa. This is a IBD leaderboard stock. I'm just gonna pull up leaderboard chart. Visa made a cup with a handle base, and this is a base breakout, and it went up but crashed down with a general market, but it finds support at a 50-day moving average. That would be an entry point. So that's another, if you miss the breakout, this is another price range, and this is a price, this is another entry point you can get into this stock. Visa, on the uptrend, on the up days, the volume is high. That's a very bullish indication that institution might be buying this stock. So this is one stock I'm holding. And then stocks on my watch list, one of them is Umbrella. Umbrella is gonna report earnings on Tuesday, so it depends on the market reaction of the earning report. If the market reaction is positive, the stock goes up, I may buy this stock. If it's not, then it will just I won't touch it. DHI is another IBD leaderboard stock, and this is a rebound from the 50-day moving average. As you see on the ARB days volume, the black bars, those are the up day volume, is much higher than the down day volume. That's a institution buy signal. So this is a stock, potentially I may buy it next week. And let's take a look. Yeah, those are the potential trades, DHI and Umbrella. And what to do in the current market. This market crash is very abnormal. It may have a lot to do with the computer trading. The market crash so big on Monday, and then institutions started stepping to buy up this market. So we see the rebound, and this rebound seemed to be tradable in short term. What I mean short term is maybe next few days, you know, that's less than a week. And at least for now, it's not the time to short the market. Market has more, after this crash, market has more potential to go up than continue go down. But for the long trades, if you want to long this market for a longer term, more than a few weeks, we should wait for the follow through day, which is when market goes up more than 1% or so with a larger volume than previous day. And that has to count start from the day 4 of the attempted rally. Day 1 is attempted rally. So anytime from Thursday, last week Thursday, to anytime next week, if the market has a up day with a much higher volume than previous day, that would be a follow through day. So when follow through day happens, that's when we can consider buy stock for a longer duration trade. That's all for this week. See you next week.